Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again. Euro currency. Sorry for my voice. Hopefully it sounds not too scaring. You can see we have the minimum changes compared to the previous session. Actually, it is reasonable. This market gradually is coming to the holidays. But in general, we could say it's a few moments here. So market keeps well at the bearish context. Yesterday, we talked about retracement before the downward continuation, mostly because of the oversold condition. But currently you could see that market actually is making some attempt to do this. At the same time, in the cross-market analysis, if we take a look at the dollar index here, we have a very interesting picture. So first of all, compared to the euro currency, take a look that dollar already stands above the previous top, while the euro currency still stands on the opposite side. So if dollar index stands already here, euro currency still stands here. So you can see that the lows have not been challenged yet. So that's the difference. Second, take a look how dollar index performs. So actually, there is no wash and rinse. There is nothing what we call a bearish signal. So this market just has broken through the top and stands there. This is potentially a bullish sign for the dollar. And it means that, well, it brings some more confidence that euro currency will keep going lower in the nearest time. Another cross-market reason to suggest this is if you take a look at the 10-year bonds. So you can see that market has broken through the 4.5 resistance, fib level here at 4.47, and now stands around 4.6. So this is actually the byproduct of the recent decision to provide the financing for the 3-month for the government to avoid the shutdown before the Christmas. And second, it also was a project to cancel the debt sale, as you know. So as you understand, such kind of the initiatives make the bearish impact on the performance of the bonds and yields as well. Correspondingly, it will support the dollar and potentially it's becoming the headwind for the euro currency because rising of the yields in the United States make the dollar more attractive compared to the euro. So this project has not been past the Congress yet, but maybe within the few weeks and months it might happen. And that's the reason why we have here this type of action. So correspondingly, all these moments are bearish for euro currency as well. But currently, market still stands in the pullback that we have suggested yesterday. So you can see that on the 4-hour time frame chart. The first level that we have specified has been tested very accurately. Now market has formed bullish wash and rinse of the previous lows and shows really fast acceleration here. It's a kind of the sharp reversal candle. And well, this actually relatively strong performance, which makes us to think about the possible stronger pullback here. So for instance, it might be in the way of the double bottom. In this case, the target will be somewhere around 104.70, right there, which is perfectly agrees with this resistance level. So if you have taken position here yesterday, so probably you have standing minor profit or somewhere in the break even. So you could decide what to do with this, either to close and wait for the deep retracement or just apply the scale in, just taking more position when the market will keep going higher, when it will be not quite triple to sell, but something of this kind. So kind of the ABCD upward performance, retesting of the confidence. So I'll keep it shortly. This level is still stands on the table. So we're still considering it and potentially an attractive level for possible position taking. And currently it's not the fact yet that euro currency indeed will climb there, just because based on other markets, as I said, dollar 10-year bonds, all of them make the bearish pressure on euro currency. So it might happen that actually market just will stuck here in this range and then will reestablish downward action later. It's also possible. Today we will have the PCE numbers, consumption expenditure. So it's hardly it will bring some surprises, but it's also makes sense to watch for and see what the results will be. So that what we have on euro currency in 2 words, mostly the plan that we have described yesterday stands intact. If we will get here, we also will consider chances for short position taking. If not, market will start here, then probably next week it might be starting of the action right from this consolidation without any deeper upward pullback.